Hey everybody, this is John and welcome to the free video. So, of course, a lot of all eyes on Apple announcements and things like that. And at the end of it, it's not like Apple crashed, didn't really rally. So the question is, what happened next? I like the idea here that Apple is just going to do a nice little conservative pinning play at 160 into this quadruple expiration. So why 160? So if we look at the 160 strike and we see the open interest on the call side at 93,000, over on the put side at 54,000. So that represents a lot of stock. And you can see the volume here today, an insane amount of volume. So, just think of it, both of these expiring worthless, or think of a lot of those straddles just being taken off. And it's just going to kind of pin that stock there. So if you guys are options traders and you're looking for like doing an iron fly or something like that, you can do the 160 $5 wide, or you could obviously, let's do let's actually post that correctly. So if you did this $5 wide, you can see your max loss is $3,400 against a $1,500 max profit. Now, obviously sometimes this throws people for a loop. They're, well, why would you do that risk to reward ratio? Well, you don't hold it to max loss. You're looking at this as kind of a day trade. So if it gets to the point where you don't like it anymore, you just get rid of it. But you can also narrow down the risk by tightening the spreads. Okay, and now that's not right. I don't know why it said that. So I did something wrong. Yes, wrong direction. So now I'm risking $1,200 to make $1,220 to make $1,280. So with a simple click of the mouse, I changed the max potential risk-reward ratio from risking 2 to make 1 to risking 1 to make 1. So I do like this trade quite a bit, and I think it's an easy one to do and to manage into the end of the week. And then the other one here that I really like is Amazon 1,000 put credit spread. So we played this one today, and in retrospect, I would have just bought my entire account in long calls yesterday, but I was just looking at a 1,990 put spread, sold it for $5. I've got an order to buy it back at $250, so it's pretty conservative, but I'm going to be on an airplane tomorrow, so I'm not going to be able to manage this. So I wanted to put a very conservative trade on this. But if you look at this, that $1,000 strike, you've got good open interest, not great on both sides, but it's also that nice round number. So I like that too. And then the other thing I'm going to be keeping an eye on here is dollar yen. For those of you that watch the yen, if dollar yen is going higher, then stocks are going higher as well. Now, don't get this confused with yen futures. With yen futures, if it's going lower, this is what I normally watch. Then stocks are going higher. Those are the inverse. But with dollar yen, we get voodoo lines. And so the reason I'm bringing this up is that we got a little bit of resistance here, but we could potentially, with this squeeze, get up to that fire line. And so continued strength in dollar yen also equates to potential continued strength in stocks. So looking for chop into the end of the week, quadruple witching, and then next week things are going to get interesting. I will dive into the premium video and we will do an extensive chart analysis in all the key sectors and key stocks. You guys have a good one, and we'll see you at the next update.